Morning, everyone, and welcome to our Exchange webinar series. Today's session takes a deep dive into New Hampshire's latest economic forecast and explores how it may impact your business. I'm Curtis Picard, President and CEO of the New Hampshire Retail Association. The New Hampshire Retail Association is a statewide voice of the retail industry, representing businesses of all sizes and advocating for policies that support a thriving retail economy. We are pleased to bring you a trusted partner, State Economist Brian Gottlob, who will provide insights into current economic trends, demographic research, and policy developments. This presentation will cover key topics such as income changes, including the effects of tariffs, workforce and employment shifts, migration patterns, and much more. We're pleased to co-host this morning's webinar with Mike Summers from the New Hampshire Lodging and Restaurant Association and Kevin Daigle of the New Hampshire Grocers Association. We appreciate your support and partnership in today's webinar. A few quick procedural notes before we begin. All attendees are muted throughout the webinar to reduce background noise. We will also reserve time at the end for a brief question and answer session, where Brian will answer your questions to help get the most from today's presentation. To submit a question at any time, move your mouse towards the bottom of your screen. On the black toolbar, you'll see a white Q&A icon. Click it, type your question, and hit send. Finally, today's session is being recorded and will be made available after the event for anyone who would like to revisit the material. It is now my pleasure to introduce our guest speaker, a recognized leader in economic and labor market analysis, whose insights are valued by both public and private sector stakeholders. Brian Gottlob is the director of the New Hampshire Economic and Labor Market Information Bureau, a role he has held since 2019. Before that, he was the founder and principal of Pole Econ Research, an economic consulting firm based in Dover, New Hampshire. There, he spent more than 2 decades advising corporations, government agencies, and policy organizations on demographic, labor market, and industry trends. Brian has conducted research in more than 30 states, and his work continues to influence decisions on workforce development and economic policy. Earlier in his career, he served as Vice President for Fiscal and Economic Policy at the Business and Industry Association of New Hampshire. He holds undergraduate degrees from the State University of New York and a master's degree from the University of New Hampshire. Please join me in welcoming Brian Gottlob.
Thank you very much, Curtis, and thank you for the invitation to come and speak to your members, as well as the Lodging and Restaurant Association members. I'm going to just say the presentation will take a little bit different direction than I often do in my economic forecasts. I'm not going to speak so much about the longer-term demographic and labor force issues that I typically speak about that influence the economy of New Hampshire, because there's so much happening in real time, issues at the national level and the state level that are creating so much uncertainty. I really want to focus on those, and when I talk about that, I'm largely talking about what's happening with tariffs, and in particular their impact on the retail industry. So with that long introduction, I've got a lot of charts. I hope to get through them all. Sometimes I go through them a little bit too fast, but as Curtis mentioned, we'll have time at the end of the presentation to hopefully answer some of your questions. So just in general, to give kind of a broad look at what's happening in the economy, my overview. My big concern is the U.S. economy is really kind of at an inflection point. I like to say we're on a precipice. Beginning of this year, I didn't hold out much expectation that the economy could fall into recession. I thought we began 2025 in a really good spot, national economy, but the probability of recession has risen sharply. And while I'm a big believer in probabilities, I would put the probability at somewhere just over 50%. And it's really dependent on what happens with tariffs and how long they're in effect. The good news, and this has been the real strength of the economy, is that job growth has been solid, the labor market's good, and job losses are really low. We're just not seeing a lot of layoffs. My concern about that is that when we do start to see layoffs, if we do, and I don't have a forecast that that's likely to happen, but if it does, it happens very quickly. When unemployment starts to rise, it tends to rise, and job layoffs tend to increase very quickly. Um, Big problem right now, a lot of uncertainty and confidence. Confidence in the economy has fallen very fast. I mean, it's been low for quite some time among households and businesses, but it's really started to deteriorate pretty significantly. And generally, at least over the last year or two, households have not felt very good about the economy, or at least in surveys. But the thing is, they've continued to spend. So the difference between their actions and their thoughts about the economy has been very wide. The problem is that confidence and recessions are really about faith in the economy and confidence. So um, the fact that there is such falling of confidence in the economy does give me pause for concern that, in fact, consumers will start to cut back on their spending. And if they do, 70% of the economy is based on consumer expenditures, um, then we're at real risk. And I'll talk a little, show some evidence of where that is happening. I said consumer spending has held up really well despite those confidence indicators. Um, and in particular, um, there's been a bump in spending pre-tariff. The pre-tariff bump, people looking to get ahead of the potential price increases related to tariffs. I'll show you some of that, in particular on some big ticket items like automobiles and household furnishings and furniture. But after that bump, the concern that I have is that spending will fall off more sharply. New Hampshire really began 2025 with some pretty solid upward momentum. We were seeing job growth accelerating from the middle of the year, where it was at its low point in 2024. Um, it it's started to peak, and actually growth peaked around December. It has since leveled off, and we're starting to see a bit of a slowdown, both in New Hampshire and nationally. Good news, again, unemployment claims are low by historical standards. Another concern that I have is that business, at least in their reporting of how their business is doing, is slipping. And that's reflected in tax payments. We've seen a lot of the news lately about state revenues and how they're slipping, and I'll show you some data on that. It was clear prior to all of the tariff announcements, it was clear prior to um, the beginning of the year, really in 2000, late 2024, December, January 2025, I assumed that the growth in the national and U.S. In New Hampshire economies was going to slow, but it was a little bit hard to forecast exactly how much slower. I didn't see it to be significantly slower. And then the some of the policies that began to take effect, in particular the tariff announcements, really put some brakes on a lot of economic activity, a lot of investment activity, a lot of hesitation in hiring among businesses. And so I do expect growth to slow even more. It's just hard to say exactly how slow that will be. A lot of that has to do with how long trade war lasts. Trade war resolution is really a key to my outlook for 2025. I mentioned consumer confidence is slumping badly. This is the Conference Board's measure of consumer confidence. And I tell you, I don't generally focus a lot on that metric, on that survey. Um, I am I particularly focus on it during inflection points, points at which the economy is either starting to really deteriorate or really improve. And one of the keys to the Conference Board in looking at it is if you look back since its inception, at any time, if the Conference Board Consumer Confidence Index falls at least 20 points in a 3-month period, that has generally signaled a recession. recessions are fundamentally about a loss of faith in the economy. Consumers lose faith, so they stop spending. Businesses, in reaction to some of that, cutbacks in spending, cut back on their hiring, or maybe layoffs. So we're at that really a critical point in terms of consumer confidence. So next month, the May reading will be really critical from my perspective. If it doesn't improve, I think that increases the odds that the nation falls into recession. So what happens in a recession? This is a chart that looks at, if you take the last several recessions, what typically declines in terms of spending, household spending during recessions? Well, big ticket items in particular take a beating. Vehicles, furniture, durables, washing machines, uh, refrigerators, those TV, things like that take the biggest hit. I will say this is a little bit different in that we saw a huge bump in sales of vehicles and furniture and furnishings in particular um, just prior to the recession. So, or just prior to the tariffs. So even during this recession, if there is one, um, will I would not expect vehicle sales to fall off. I expect them to fall off without a recession just because there's been so much front loading of purchases in those areas. But in general, this is what gets cut back. Not any, really no aspect of expenditures really survives a recession. Everything gets cut back. I mentioned, consumer spending has held up pretty well. This is a little different measure than retail spending. It's overall consumer expenditures. So that includes services, things like airlines. It includes healthcare spending. So everything, including retail. And what you see on an inflation adjusted basis, it had been holding up very well throughout most of 2024, and I just have several months at the end of 2024 here. It had been holding up very well. It started to slip in February as some talk and concerns about things like tariffs, some additional concerns about where the economy might be heading. But March, it a big boost. And why was that boost? Again, it was largely related to retail expenditures and particularly big ticket items because households and consumers were looking to get ahead of paying more for the tariffs. Just yesterday, Ford announced that they will have price increase. They expect price increases that will average somewhere on the order of about $2,000 per automobile. That's actually lower than what some forecasters had been anticipating. GM also noted that it will be raising prices if these tariffs continue for any length of time. So in order to get ahead of those price increases, a lot of expenditures on vehicles and some other large ticket items. That's reflected in this chart. I apologize, a little busy. It's a spaghetti chart. Um, it just breaks down the year-over-year growth in retail spending in a number of categories. What you see is that most of those lines, or a majority of those lines, are sort of, steady increases in um, uh, modest increases in year-over-year spending. The one that declined has been eating and drinking places. A lot of that has to do with the fact that inflation or the CPI for meals away from home had been really high, so that was causing expenditures to rise, even if the actual number of visitors to restaurants and drinking places may not have increased that much. The prices were increasing, so expenditures were increasing. The two lines that really um, our standout here. Again, the black line, which is furniture and furnishings, which had been very low. Why was it so low um, in much of 2024? Well, a lot of that expenditures has to do with housing. So when there's a lot of housing activity, um, you know, new housing, people buying houses, or when people are starting their first household, a lot of money is spent on things like furniture and furnishings. We know the housing market has been very slow, sales have been very slow, and as one result is that has an impact on furniture and furnishings. That has picked up, and it's risen pretty significantly, and I believe a lot of that has to do with again, looking at trying to get ahead of some of the tariffs that have been imposed, or some have which have been paused for a while, at least until July, some of the worst of the tariffs. Um, and the other one that stands out is automobiles, and I've talked about that. Big boost in automobile activity and automobile sales, despite the fact that interest rates have been pretty high. Again, that was an effort to get ahead of the price increases related to tariffs. Just another way of looking at that, just taking 1 month, March 25 versus March of 24, where have the big increases in retail expenditures occurred? Automobiles, furniture, and home furnishings. So two standouts. This is just clear evidence of consumer behavior. The concern that I have again is that so much of that spending has been front loaded in order to avoid the tariffs, that we'll see the follow-up will be a much lower decline and much lower overall growth in sales in those areas moving forward. But again, I don't have skipping ahead here, I don't have a recession in my forecast. However, if there is one, all of these will suffer to some degree. Big issue for retailers, from my perspective, I've been trying to follow this pretty closely, is what's happening with imports, and in particular imports for China, because so much of what is on retail shelves is produced in China and other Asian countries, in terms of clothing and some other products. But this to me is an indication of what may be coming in the next month or so. And I say, with a question mark, will there be a summer of empty shelves? This is a measure of the amount of containers, TEUs, 20-foot equivalent units, which is the standard size for shipping containers. How many are coming into the Port of Los Angeles? And the Port of Los Angeles is the primary port of entry for goods from Asia. And big boost. These were scheduled. Big boost at the end of April. It takes approximately 4 to 6 weeks to get a container ship from Asia to the Port of Los Angeles or to the West Coast. So a lot of these ships were launched, and the cargo that they contain before the tariffs were going to take effect. So there was a big increase in that week of April arrivals, April 20th, 26th, prior, compared to the same weeks, same 2 week or same week in 2024. After that, there's been a significant decline, as much as this current week, about 35% fewer uh, containers coming into the Port of Los Angeles. From there, it takes up to 10 days to get to warehouses by truck or to the shelves of retailers. So my expectation is that by Memorial Day, we will probably start to see a decrease in the availability of products on shelves. Wall Street Journal a couple of days ago did have some data that from a private organization that tracks online availability of products, and it was down minimally, about 5% in the last week or so. I would expect that to increase. So the resolution of the tariffs with China are really critical to keeping goods on shelves. And if it doesn't happen, we'll see that loss of confidence among households decline even further. The lack of availability of products, possibly price increases related to that, people raising prices in order to compete for what limited goods are on shelves. So it will be very problematic. And I know that there's a lot of talk about trade deals with other countries. Uh, to some degree, that's important, but it's really China that's making a difference, because that is right now um, the one tariff that hasn't been paused. The so-called reciprocal tariffs have been paused until July 8th or July 9th in order to make some trade deals. But the tariffs on China at 145%, that's not a tariff. That is an embargo. And it's the same in China. They have 125% on US imports. Those are simply embargoes. They are not tariffs. Nobody's going to pay more than twice the cost of a good in order to import it into the US. So we're basically embargoing products from China, and a lot of those products, a significant portion of products that are on shelves are coming from China. And by the way, I want to make clear, the things I'm talking about here are not political statements. I'm not a political person. I'm simply looking at it from the prospect of what the economic impacts are. And I do think when individuals start seeing a lack of availability on store shelves, um, there will be some very negative consequences for the U.S. economy. So hopefully we'll get that resolved. Um, Small business confidence also has taken a dip. I like this chart. This is NFIB, Small Business Optimism Index. It had been declining for much of the last few years. And why would that be? Well, small businesses are always on the front lines of some of the worst economic impacts. Uh, when prices rose really dramatically, small businesses have the most difficulty in passing those costs along. There were significant labor shortages post-pandemic. Small businesses had more difficulty competing for available labor with larger businesses, which can absorb the higher costs of competing for labor and rising wages more easily can small businesses. So small businesses were really, as they often do during more difficult economic times or economic issues, have more difficulty competing. However, big jump in confidence after the election. Small businesses love Republican administrations, but what we see is that now with talk of tariffs and some of the policies, the bloom has sort of come off that rose in terms of their expectation. I think it's next week that the April numbers for the Small Business Optimism Index will come out. And I do follow this because in general, I will say this is a national survey, but it did track pretty well with what would happen with employment growth in the state of New Hampshire. Generally, there was a pretty good relationship. When that number increased, generally hiring was a little bit stronger in New Hampshire. Let's see here. Okay. Um, in addition, taking a look at a particular New Hampshire measure, Census Bureau, year and a half, 2 years ago, started the Business Trends and Outlook Survey, surveying businesses across the country. I look at just the results from New Hampshire. And they ask businesses a number of questions. One of the most important questions they ask is overall, how would you describe this business's current performance? And they give them a choice of excellent, above average, average, below average, or poor. And over a 6 week period, they survey every 2 weeks. Over a 6 week period, 6 week moving average period, I look at the net positive. So basically, I look at those who say excellent or above average and subtract those who say below average and poor to get kind of an overall assessment of where. And what you see is, again, early in 2025, much like that small business NFIB survey, um, performance slip. Now, whether that's actual performance of businesses or whether it is their fear, their uncertainty. I think some of it has to do with that, the uncertainty and the fear of what might happen. But clearly, it has fallen fairly dramatically, and that's reflected in a couple of things. Um, this is you may have seen because there's a lot of talk about the state budget, what's happened with tax revenues, and there's two lines here. One of is the blue line, which is annualized business tax revenues, and that's been declining. And you see, in particular, in April, problematic, a pretty significant drop. I had expected we might have been at an inflection point, a point at which it looked like, based on March numbers, things might be turning up. April were very disappointing, and a lot of that has to do is with estimated tax payments. I think businesses are concerned about the future and about the prospects of their business, and that's reflected in the last chart that I showed you, so that they may be holding on to those payments, not paying as much in their estimated taxes, um, and the need to hold on to cash. So it may not turn out that bad, but at least in the short term, businesses' tax revenue is falling off. The other line is non-business tax revenue, and this is one where I was pretty certain things were on an upswing, but the big drop there is largely related to one thing. There's the repeal of the interest and dividends tax. That was more than $150 million. There's still some payments that are trickling in, but that is kind of a self-inflicted decline in tax revenues and then in non-business tax revenues. Overall, what you see is kind of a general decline, largely again related to two things: what's happened with business tax and what's happened with the interest and dividends tax. So let's have some good news, because that's all bad news. Good news is, overall, New Hampshire has performed very well. Our labor market has performed very well compared to overall the nation, but in particular with our neighbors. This is a chart that shows growth in private sector employment in New Hampshire compared to where we were prior to the pandemic. Our peak employment in prior to the pandemic was in February of 2020. For a lot of states, it was February of 2020. For some states, it was December or January of 2020. But as you see, compared to our New England neighbors, we've done or are doing quite well. Not as well as a lot of states. You look at states on the far right of this chart, they were states that didn't have the kinds of restrictions on economic activity during the pandemic that much of the northeastern states did. But I will say that, yeah, compared to almost all northeastern states, with one exception, I'll talk a little bit about that, New Hampshire has done remarkably well in terms of job growth. There's one state in the Northeast that has done a little bit better, and that's New Jersey. I do not believe New Jersey has a stronger economy than New Hampshire, but they benefited employment-wise from kind of the hollowing out of a lot of office employment in New York City. So if a worker who works in a company that has an office in New York City decides they're going to be working remotely full time, despite the fact that their company is in New York and they are working in New Jersey, they will be counted among employees in New Jersey. So I think New Jersey got a real big benefit from that. But overall, New Hampshire has done better than almost all of the New England, certainly all the New England states and most of the northeastern states. Looking at year over year growth on a 3 month moving average basis, this is private sector. I focus on the private sector because what happens in government is, while it's important, is really kind of a lag of what's happening with private sector employment. When private sector employment declines, generally after a lag, government employment will also decline. Uh, these numbers are very different than what they looked like a few months ago. It looked like we were having, based on surveys, stronger job growth, but the benchmarking process, which matches up monthly survey numbers with actual payroll reported numbers as part of the unemployment insurance system. We do that every year. We do what's called the benchmarking in January and February. That brought the numbers down. What it does show, however, is that we, after a lull in terms of private sector job growth in the middle of 2024, it started to pick up. There was, pretty solid momentum in the labor market in terms of employment activity. Businesses also were showing greater optimism, but it has since leveled off. And again, a lot of the economic indicators, both in terms of confidence and some actual real-time real hard numbers in terms of expenditures, et cetera, have started to decline based on some of the things that are happening at the national level. The U.S. number has held up pretty well. I will say I don't have the April national employment number here. It was a pretty good number, 177,000. But I will say, despite the fact that there was a lot of cheering about that, the 2 months prior were both revised down. The April number, if you know how those numbers are collected, they're based on a survey of businesses, a payroll survey done 1 week of the month, and it happened to be just the very week that Liberation Day, just after Liberation Day had been announced, the announcement of tariffs. So it really didn't have time to affect any of the employment decisions and hiring decisions of businesses. Some of that will show up likely in later months. Um, Good, again, some positive news. Um, there's still a demand for workers. New Hampshire has had, and this is often a part of my presentations, but I didn't think I'd have the time to go into it during this presentation because of all of the need to talk about tariffs, et cetera. Um, because of labor shortages, because of retirements, an older workforce like much of New England, there's going to be job openings, and they have held up pretty well. And overall, the job openings rate, which is the number of jobs that businesses say they are looking to hire for, divided by the overall employment plus the number of job openings, that gives us a job opening rate. It has been higher in New Hampshire than much of the nation, and yet our employment growth, as you saw in a prior slide, has been a little bit below for much of that time period. Why? Well, because we have had greater labor shortages than the nation overall. Nation overall has had some labor constraints. New Hampshire has been more labor constrained. You see it. I know Mike Summers in the Lodging and Restaurant Association for a lot of the time period post-recession was seeing really significant labor shortages. That has eased quite a bit, at least from the data that I look at. I'm sure that retailers have faced some of the same issues. So New Hampshire has been more labor constrained. So while we may have more job openings, we've had a little bit more difficulty in filling them. Good news, more good news. And this is really how I have based most of my optimism for the last more than a year. Um, the number of people who are filing for first-time claims for unemployment is near historical lows in New Hampshire. And I will say pretty close nationally. Yeah, to historical lows. This is a chart that goes back just to the beginning of the millennium, 2001, and it shows the number of claims on a monthly basis, and it's a 12-month moving average basis, the number of new claims for unemployment that have been filed as a percentage of all employment in the state. And the shaded areas are recessions. And there's a break. You see the break there, and that's really during the pandemic. Why is that break there? Well, prior to the pandemic and currently, we handle maybe around somewhere in the order of 400 claims. It varies. If there's a school vacation week or something like that, we'll see a spike as bus drivers file for unemployment. But 400 a week. During the pandemic, we had weeks where we were handling 23,000 or more claims for unemployment. If I graph that on this particular chart, all the red line there would go to the bottom. It would just be kind of a flat line, and you'd only see the spike during the pandemic. So um, just give you an idea of why that is left blank there. So we're in a good spot, and until I see that number start to increase, then I have confidence that we can avoid a recession. But again, when the numbers start to pick up, tend to pick up very quickly. They haven't picked up dramatically. They're still at a pretty good level nationally, although they did pick up in the most recent week or two. They are still at a low level in New Hampshire. So as long as there's not big layoffs, then that means income isn't going to fall. And if income isn't going to fall dramatically, people may cut back on their spending. They may not, dine out as much. They may not buy that automobile, or they may not buy that washing machine or TV or whatever. They may be reluctant to do it, but they're not going to lose their income. And if they're not going to lose their income, then spending, while it may slow, it's not going to fall off the table. It falls off the table when there's large numbers of people losing their jobs. So my forecast, this is just my GDP forecast. It's at the right 2025. I in most of my presentations, I do a lot of forecast presentations for chambers of commerce, etc. Um, at the beginning of the year or at the end of 2024, I had originally expected about 2.2% growth. Um, I revised that forecast relatively early in 2025. And then after tariffs were announced, and I considered some of the impacts, and if tariffs hold for the full year, I would expect, again, a pretty significant decline in GDP, but still not a recession. And that's, I'm holding on to the strength of the labor market, holding up enough to avoid recession. Looking at employment growth, again, assuming that the tariffs, and particularly the Chinese tariffs, don't last a full year, I do expect that job growth will slow. It is starting to slow. Again, prior to the tariff announcement and the end of 2024, I had actually New Hampshire a little bit higher, about 1.1%, and actually a little bit higher than the US. But now I see a more significant slowdown. But again, still not a recession. Some of the risk to that outlook, obviously tariffs, number one, imports and exports, and for New Hampshire, probably, imports and nationally imports more than exports, but exports will play a role. Federal job cuts, again, this is not a political statement, but when people lose their jobs, it means they don't have money to spend, and that affects things like retail expenditures, restaurant spending, etc. We have over 8,000 federal civilian employees, and if you don't count the Postal Service, is about 4,800. There's been talk of cutting 10% of the workforce. That implies, 480 people in New Hampshire losing their jobs. That would double if it happened on a weekly basis, it would double our number of claims in a particular week. Block grants, cutting back, and we're already hearing some of this. A lot of organizations that receive, many local organizations, whether it be housing or some healthcare, um, 5.6 billion of those grants in 2025. Already 3.7 has been outlaid. But if, the talk of 10% cutbacks occurs, that will have a significant cutback and impact on a lot of not-for-profit organizations. And already we're hearing from some not-for-profit organizations that are expecting to lay off people. Federal prime contracts, contracts going to businesses, 6.1 billion in 2025. In New Hampshire, 90% of that is Department of Defense, so I don't think that will be cut back. And honestly, 60% of that goes to one company, and I don't expect that they will see a reduction. But if we cut all of these by 10%, the remainder of the 6.1 billion. That's not 90% Department of Defense, 10% on the federal assistance, 10% on employees. I modeled that using an economic model, and if all of that, 10% of that were reduced, then we would see a reduction, not necessarily job losses, but if we were going to add 6,000 jobs in 2025, we would only add 1,000. So we'd see 5,000 fewer jobs being added if all of that takes place. It's looking like that won't all take place, but there's still time. Reduction in immigrations and visas could exacerbate and are exacerbating labor shortages. And I think we're seeing that in some industries. I think it, increasingly will affect lodging and restaurant as a lot employs a lot of people on on temporary visas to work in the summertime. Construction industry will be also greatly affected. Um, I don't running out of time, so I don't want to spend a lot of time, but this is just, for nerdy economists, how tariffs affect inflation. Import prices, it raises import prices, input costs, not only, it if an intermediate product comes in, it gets translated into a final product, and that raises it will, because it raises prices, reduce consumer demand, so that lowers some inflation pressures. The value of the dollar, in theory, should go up. That would also cut some of the impact, but overall about 1%, 1/10 of a 1% for every 1% increase in tariff rates. Just to give you an idea, overall tariffs are in the US are under 3%. And that's measured by how much tariff revenue do we collect as a percentage of all imports in the country. The the proposed tariffs, if actually imposed, would be somewhere around 20%. I think now it's probably closer to 18%. But anyway, adding 1/10 of a percent would imply that, we'd add about 2% to the inflation rate, which would people would really notice and be very significant. How are retailers dealing with it? This is just based on some things I've read in the Wall Street Journal. And I don't know how this, your membership is dealing with this, but retailers pressuring suppliers to absorb costs. Certainly a lot of visitations to the White House to warn the president of what higher prices that may come about. And some of the big retailers looking at all kinds of things to offset the higher tariff costs. But I did note that even, despite the fact that tariffs are not going to take effect on things like cell phones. Did notice that Apple's CEO Tim Cook said that they can hold off price increases for a while, but they do expect that if tariffs remain in effect for any length of time, that they would have to raise prices. Um, just where we, get imports from Canada. China, we're not as greatly affected, although I will say indirectly, we are much more affected by China. This is just direct imports from China, and we know that a lot of the products that come from China first make their way into the West Coast and then come here, so they wouldn't be directly imported into New Hampshire. Where do we export to? China, Canada, and I highlight Canada here because that's in a lot of ways some of our has been our closest ally and are greatly affected by a 25% tariff. And I'm kind of zipping through these because I want to leave time for questions. Aerospace products. I highlighted that because it's a real concern for me. It's a really important industry in New Hampshire between companies like BAE Systems, but also Safran, GE makes jet engines. A lot of those parts go into airplanes that are made around the world. And if there's tariffs put on them or a desire to reduce purchasing of them, New Hampshire's manufacturing sector would be pretty significantly impacted. Lastly, I want to talk about what I think is one of the most pernicious impacts of some of what we've done with Canadian tariffs. Border visits by um, uh, visits into the US from Canada have really started to decline dramatically. This just shows the most recent 3 months that I have data. Go back December, November of 2024, they were all up in compared to the prior year, same month, beginning in February, right after talk of, Canada being the 51st state, the imposition of tariffs on what has been considered a very friendly neighbor. They declined, and in March, they declined even more. Those data released by Statistics of Canada on the 10th of every month. I'll be looking at closely what's happened in April. We can hope that some of that animosity and reluctance to visit the U.S. Will diminish. I don't know. It certainly has a large impact on the hospitality industry, but also on the retail industry, with so many Canadians coming over to enjoy what is tax-free shopping for them. This is just similar data produced by U.S. Customs Border Patrol, but it measures the flow both ways. So we have a lot more people in the U.S., so they visit Canada in greater numbers. That hasn't been affected as much, so that minimizes but the effect is same. The cross-border traffic is down. Lastly, what do we have for evidence that it might be affecting? We don't have retail data for New Hampshire, unfortunately, because, well, it's fortunate we don't have a sales tax, but because we don't have a sales tax, we don't have monthly data in terms of how much is being spent. But we do have meals and rentals taxes, and that has looked like it's stagnated somewhat, and it can change with a period of sunny weather. Lower gas prices should certainly help in terms of visitations, and maybe the reluctance of people to travel further away will benefit. But what is clear is, again, since the beginning of the year, we've seen sort of a stagnation in terms of those. So that's some impact of evidence of the impact that this is having. I will stop now because I do want to leave time for questions, comments, hate mail, whatever. It's a lot, I know, and a lot of unknowns. And I wish I had better news because fundamentally I'm an optimist, and I hate to be pessimistic, and I'm not pessimistic, but I'm just very concerned. And there's time to pull out of a downturn, but time is running short. I really think we have to the end of May to reverse some of these downward trends.
Thank you, Brian. That was perfect. That was really exactly what we were looking for. Thank you so much for taking your time to share
Sure.
your thoughts on New Hampshire's economy. Just as a reminder, we have time for questions. So if you've not submitted one yet, just move your mouse to the bottom of the screen, click the white Q&A icon, type your question, and hit send. So we're waiting for some folks to do that. I do have some questions to start off with. Um, at certain points in the economy, I've often felt like, when we're going through inflationary periods, you reach a point where it's almost becomes a self-fulfilling prophecy. And
Yeah.
is that true also with recession?
Yeah.
Can we, talk ourselves into a recession essentially?
Absolutely. That was my huge fear in early 2023. I did not see data indicating we were going to be in recession, but there was talk all over the place. And that was my fear, that we would do that. Recessions are fundamentally a loss of faith in the economy. So if enough people start talking about the possibility of recession, then it can become a self-fulfilling prophecy. I don't spend a lot of time looking at things like consumer confidence or consumer sentiment. I mean, I pay attention to them, but generally they don't mean a lot. They tend to mean more and be a leading indicator at inflection points in the economy, when the economy is either starting to turn down really significantly or starting to turn up. And we're at that point right now where I'm paying more attention because I think we're at that danger point. We're at that danger point where enough people are hearing enough bad news and talk that we can talk ourselves into recession. Again, people are not losing their jobs in mass. What does that mean? And inflation has come down. That means people have money to spend. But If they fundamentally lose confidence and lose faith, they will stop spending. And if they stop spending, businesses will stop investing and they will stop hiring. And that's a recipe for a recession.
I think you're spot on about the timing we're in right now. It's always been my understanding that retailers around this time of year are actually starting to place their holiday orders. And
Right.
so we're looking forward to the holiday season. Toys are made in China, those types of
Yep.
things. And I get the sense that the larger retailers, you know, for better or worse, will have the cash flow to pay the tariffs and be able to get the product. It
Right.
will likely, result in higher prices for consumers. But I worry about the smaller
Yeah.
businesses
Yeah.
that
Yeah.
that will either don't have the cash flow, won't be able to get the products they need.
To me, it's another indication of why small business confidence has been relatively low post pandemic. They always have more difficulty dealing with negative shocks in the economy, meaning higher wages, competition for labor, higher prices for inputs or products. All of those things, have been happening, and this is just another blow. Yeah, I think, the Walmarts and the Amazons and the Targets will find a way to deal with this, but small businesses, are really going to have much more difficulty.
We just got a question submitted. We would hire if any employees were available. Without affordable housing, childcare, and
Yeah.
public transportation, our
Yeah.
mid-state upper region
Yeah.
cannot grow.
Yeah, no, as I said at the beginning, I generally in my forecast spend some time talking about housing in particular, the lack of housing and how it's impacting, and particularly, it's affecting all, across the labor market, but in particularly lower, skill, or lower wage occupations. Generally that would include things like the restaurant and lodging industry as well as retail. Um, I didn't have time to talk about that, but it is having a really negative. One of the big impacts is it is deterring people from moving into the state, and that's really the way our labor force grows. It's the way it's grown for decades. We have low birth rates. Unless people move here, and they would move here, this is still an attractive state, but the numbers are clear. It has slowed, and it's slowed because there's simply not a place to put those individuals. We have record low vacancy rates. We have record low, the number of houses for sale are down 75 to 80% for where they were a few years ago. Vacancy rates in many of the more desirable places are well under 1%. And that's just not a recipe for attracting people.
Would a recession help housing prices or housing availability?
You know, it won't help availability. And I'll tell you that the tariffs, again, I go back to tariffs, doesn't help housing affordability because the key to this is building more. If you want how, I, I, I kind of get the ire of housing affordability advocates. I'd love to just build affordable housing, but those run into a lot of roadblocks. It would be great to just build affordable housing, but if we build anything, we're going to take pressure off the price. We've got a lot of people who would like to be buying, who are stuck in the rental market, who have the money to buy but haven't got the availability. What's that doing? Those people have more money. It's driving up rental prices. So just building more of anything will help reduce the prices. So the key is to build more. I think we have interest in building more, but we have reluctance at the local level, but we also are now, like we did during the beginning of the pandemic, we're seeing price increases on commodities. And if, things like lumber coming from Canada, tariffs, it doesn't help the housing affordability or housing availability situation.
Yeah, and so we had an attendee submit something. It's not really a question, it's more of a statement, but it's really right in the same vein of what you were just talking about. This person writes, the tariffs and uncertainty will force innovative building materials to be developed and considered. Usually builders are conservative and like to do things the way they've always been done. When the usual materials get as expensive as new products, the dynamic changes.
Yeah. Yeah. I'm a big believer that, in that we find ways and become innovative, and that's the great strength of the U.S. economy is innovation, unlike a lot of places in the world. But those don't happen in the short run. It's not gonna, the dynamics aren't going to change in 2025. New materials, new methods of building, etc. It's not gonna affect the outlook for 2025, but you're absolutely right. The economy, the production methods, etc., change and adapt to the realities, but it doesn't turn in 6 month period.
So just one, there's no open questions from the audience, but I did want to mention one thing that we were talking about before we went live this morning, which was gas prices. We're
Mm,
all kind of surprised that gas
yeah,
prices haven't come down as
yeah,
much as we
yeah.
think they should. If they do come down significantly, if we start touching that $2 a gallon consumer price, will that be helpful in turning things around?
I think it does. I mean, I don't know that it will turn things around, but I think, help set a floor on how low how much of a reduction in economic activity we see. Low gas prices are always a benefit to New Hampshire. And I have modeled this. I've done pretty sophisticated economic models where I could show where, cigarette tax revenue benefited from low gas prices. It's one thing to travel a half hour or 45 minutes to come and buy cartons of cigarettes when gasoline prices are low, but when gasoline prices are $4 a gallon, it doesn't make as much sense. The same is true for visitations. We'll get a lot more visitations. Um, I still think, it's not gonna reverse a downward trend, but it will help set a floor in terms of how low we go. So low gasoline prices are maybe, and if they actually did fall to where they should be based on oil prices, that would go a long way toward helping that consumer sentiment avoid that 20% drop, that consumer confidence. So it's kind of annoying to me that, I do follow gasoline and oil prices pretty closely. And it's just, there's been a divergence. Usually, when we have oil prices at $60 a barrel, or a little lower as we've had, we should be well below where we are right now. We're not. I don't know what's behind that, but it will help.
So why don't we wrap things up there? This concludes today's webinar. On behalf of the New Hampshire Retail Association, New Hampshire Grocers Association, and the New Hampshire Lodging and Restaurant Association, a sincere thank you to Brian for sharing his expertise. Thank you all for joining us. This has got an ongoing conversation, and we encourage you to reach out to your associations with any additional questions or follow-up needs. I hope everybody enjoys the rest of your day and be on the lookout for future exchange webinars. Have a great day.